All right, let's go.
All right, everyone, welcome to our Community Development Financial Institutions presentation. We are Group 8, and we will continue now.
So a quick introduction to our group. Our members are Marco, Emmanuel, Mohammed, Rohit, and myself, Basil. Just to go over this presentation, we will be covering what are CDFIs, the different types of CDFIs, CDFI funds, their impact, some success stories, and the challenges and opportunities presented. So what are CDFIs? CDFIs are specialized financial institutions that are dedicated to providing affordable financial products to low-income communities, minorities, and other underserved populations. They were originally established in the 1970s and further developed in the 80s as a response to the lack of access to capital and financial services in these communities. Although CDFIs were originally intended to address poverty alleviation, they also served as a way to reduce racial discrimination, as many of these impoverished areas were ethnically diverse with lack of opportunities. Also, many of the services they offer, which will be discussed in more detail later, are non-for-profit, which reduces the risk of investment for the consumer and incentivizes them to take on riskier and more profitable projects. Now on to Rohit for the different types of CDFIs.
So looking at the types of community development financial institutions, there's four main structures, and these include community development banks, credit unions, loan funds, and venture capital funds. So starting off with community development banks, these are private sector financial institutions that focus on personal lending and business development in low-income communities, and their purpose is to promote financial inclusion and economic development by providing access to affordable financial services and supporting the growth of small businesses as well. And they also offer many resources such as financial education, business coaching, and low interest rate loans. So looking at the second structure, these are credit unions, and these are financial cooperatives that provide traditional banking services. They're created, owned, and operated by their participants, who are also referred to as members. And credit unions are nonprofit enterprises and are often tax exempt, which allows them to be more competitive and offer competitive rates and lower fees to their members. And one of the unique features of credit unions is their cooperative ownership structure. And credit unions are owned and controlled by their members who have equal voting rights regardless of their level of savings or deposits. And this cooperative model ensures that the interests of the members are at the forefront of the credit union's operations and decisions as well. So looking at the third structure, these are called loan funds, and loan funds are nonprofit organizations that provide financing and development for support for businesses and individuals in low-income communities, and they offer various types of loans. These include micro-enterprise loans, small business loans, housing loans, and loans for community service organizations. So micro-enterprise loans focus on providing small loans to entrepreneurs and micro-enterprises in low-income communities, while small business loans are loans to small businesses in low-income communities, and helping them, it helps them access capital for growth, expansion, and working capital. And housing loan funds focus on providing loans for affordable housing initiatives in low-income communities. And community service organization loan funds provide loans to nonprofit organizations within these communities. And loan funds are often non-regulated and take advantage of tax credits to support their operations. So looking at the final capital structure, it's going to be venture capital funds, and these are specialized funds that provide equity and debt financing with often equity features, and they range from small to medium-sized companies in low-income communities. And these funds can be either nonprofit or for-profit organizations and play a critical role in financing private business operations in underserved communities. So those are the four structures of community development financial institutions, and now I'll be passing it on to Mohammed.
Okay, thank you, Rohit. So there are several ways that CDFIs provide funds for communities in need. Some of the most common methods include loans, equity investments, grants, and technical assistance. So loans, CDFIs offer loans to individuals and businesses that may not have access to traditional banking services. These loans may be for a variety of purposes, such as starting or expanding a small business, purchasing a home, or covering unexpected expenses. Equity investments. So CDFIs may also make equity investments in small businesses or affordable housing projects. These investments provide the capital necessary to start or expand a business or to develop new housing units that are affordable for low-income individuals and families. Grants. CDFIs may receive grants from the federal government or other organizations to support their work. These grants may be used to provide financial education and other services, or to fund specific projects that promote community development. Technical assistance. In addition to providing financial products and services, CDFIs also offer technical assistance to help individuals and businesses build financial capability and improve their overall financial health. This may include financial education, business planning support, and other resources to help individuals and businesses succeed. So these were just some of the funding methods that play an important role in providing affordable and accessible financial service, helping to promote economic growth and opportunity for all. And I'll be passing it to Marco to speak more about the impact of CDFIs.
Thank you, Mo. So now we're going to be covering a little bit about the impact that CDFIs have on the community and the various things that they help contribute to. To begin, CDFIs play a big part in promoting and providing affordable credit. CDFIs do this, CDFIs do this by providing financial services such as low interest rate loans to individuals and businesses that are often overlooked by traditional banks and financial institutions. Currently, the CDFI industry manages $220 billion in funds in the US alone and continues to help millions of people on a daily basis. Next, CDFIs play a huge role in job creation as well. Even though they often focus on providing financing, they also provide employment support to businesses in underserved communities. As a result of this, in 2021 alone, 2.6 million jobs were created by CDFIs in the US alone, furthering the reach that these institutions have to help and promote economic development across North America. To continue, CDFIs have a big focus on financial inclusion as well. While researching this topic, it became clear that these organizations aim to provide inclusion through loans, but also through affordable housing projects in underdeveloped communities. In 2021 alone, CDFIs across the United States created 2.1 million housing units, as well as 13,600 community centers to help support the development of communities all across the country. And finally, CDFIs also play an integral role in supporting small local businesses across North America. These institutions often work closely with community organizations to identify the financial needs of the community and provide support where needed. By doing so, they have helped more than 700,000 small businesses launch or continue to operate throughout 2021 and 2022, ultimately strengthening local organizations and building more resilient communities. Now I'm going to pass the baton off to Emmanuel to talk a little bit more about how these impacts correlate to success stories.
Yeah, so in this section, I'll just be discussing some success stories of community development financial institutions, or CDFIs. The CDFIs are specialized financial institutions that provide services to underserved communities with the aim of promoting economic development and financial inclusion. So let's explore some examples of how CDFIs have successfully achieved their goals. We'll be looking at specific projects and initiatives undertaken by CDFIs and the impact that these projects have had on the communities they serve. CDFIs play an important role in providing financial services and support to those who need it most, and their work is essential in promoting economic development and reducing poverty. So let's just get started and we'll take a closer look. So Green America is a nonprofit organization that provides microloans and financial services to women entrepreneurs who are living in poverty in the United States. Green America was founded in 2008 by Nobel Peace Prize laureate Muhammad Yunus, who also founded the Grameen Bank in Bangladesh. The organization's mission is to empower low-income women entrepreneurs through access to credit, education, and support. One successful project undertaken by Green America is its Digital Center program, which was launched in 2019. This initiative provides women entrepreneurs with access to technology and training to help them grow their business online. Through the program, Green America has helped over 2,000 women entrepreneurs across the country to establish an online presence and reach new customers. The impact of Green America's work on the community it serves has been significant. Since its inception, the organization has provided 2.5 billion in microloans to more than 135,000 women entrepreneurs. These loans have helped women to start or expand their business, create jobs, and improve their economic well-being. Additionally, Grameen America's education support programs have helped to build a sense of community among the women it serves, fostering a supportive network that helps to sustain their business and promote their success. So overall, Grameen is an inspiring example of an organization that's making a real difference in the lives of women entrepreneurs in the United States. So the Latino Community Credit Union was founded in 2000 by a group of Latino community activists who recognized the need for affordable financial services in their community. The credit union's mission was to empower Latinos and other underserved communities by providing access to low-cost financial services, financial education, and community development. One successful project undertaken by the Latino Community Credit Union is an Immigrant Justice Loan Fund, which was launched in 2019. The initiative provides low-interest loans to immigrants who are seeking legal status in the United States. The loans help to cover the high costs associated with the immigration process, such as legal fees and application expenses. Through this program, the credit union has helped many immigrant families to achieve legal status and improve their economic stability. So the impact of the Latino Community Credit Union's work on the community it serves has been significant as well. Since its inception, the credit union has provided over 1.5 billion in loans to over 120,000 members, many of whom would not have had access to affordable financial services otherwise. Additionally, the credit union's financial education programs have helped to build financial literacy and empowerment among the communities that it serves. Overall, the Latino Community Credit Union is a powerful example of a financial institution that's making a real difference in the lives of underserved communities. So the Reinvestment Fund is a nonprofit organization that focuses on building wealth and opportunity for low-income communities as well. So the Reinvestment Fund was founded in 1985 and is headquartered in Philadelphia. The organization's mission is to create sustainable communities and promote economic opportunity for low-income neighborhoods. One successful project undertaken by the Reinvestment Fund is the Healthy Food Financing Initiative. This initiative provides financing and technical assistance to grocery stores and other food retailers in underserved communities. The aim is to increase access to healthy and affordable food options in these areas, which are often referred to as food deserts. Through this program, the Reinvestment Fund has provided financing for over 100 grocery stores, creating over 5,000 jobs in the process. Additionally, the program has increased access to fresh produce and healthy food options for over 1.5 million people in low-income communities. The impact of the Reinvestment Fund's work on the community it serves has been significant since its inception. The organization has invested over 3 billion in underserved communities, financing over 5,000 projects that have created or preserved over 100,000 jobs. The Reinvestment Fund's work has also helped to revitalize neighborhoods, improve access to education, and create more affordable housing options for low-income families. So in the slides, we discuss successful organizations and initiatives that help underserved communities. Here are some common themes and lessons learned. The Latino Community Credit Union, Grameen America, and the Reinvestment Fund are nonprofits that offer financial services, education, and support. Each organization has launched effective initiatives such as Immigrant Justice Loan Fund, Digital Center Program, and Healthy Food Financing Initiative, which have positively impacted their communities. Collaboration and community involvement are common themes among these success stories. Organizations work closely with the communities to identify needs and develop solutions. Investing in the people is another important lesson learned. By providing resources, education, and support, these organizations have empowered individuals to improve their lives and those of others. And I'll just be passing it off to Marco to talk about challenges for the CDFIs.
All right, so one of the primary challenges faced by CDFIs is access to capital. Unlike traditional financial institutions, CDFIs do not have access to large amounts of capital from depositors, investors, or government sources. This can limit their ability to make loans and provide other financial services. Moreover, raising sufficient capital can be difficult for CDFIs due to their size and lack of resources as well. Another significant challenge faced by CDFIs is competition. CDFIs often operate in markets dominated by larger, more established financial institutions. These institutions may have greater resources and a broader range of products and services, making it difficult for CDFIs to compete. This can limit their ability to attract and retain customers and generate sufficient revenue to sustain their operations. CDFIs must also comply with a complex set of regulations and reporting requirements, which can be costly and time-consuming. Compliance costs can consume a significant portion of their limited resources, reducing their ability to provide services to their target communities. Moreover, regulatory compliance can be challenging for smaller organizations with limited resources to deal with. Now passing it off to Basil for some more.
Another challenge facing CDFIs are scammers, who often call individuals claiming to be from a CDFI fund and seek information from the consumer to then impersonate or profit from them. Some scams also include receiving payments from these individuals. Some security measures need to be put in place, such as the employee from the fund having to identify themselves with a special CDFI identification so that the consumer can verify for themselves. Another challenge facing CDFIs is expanding the market within Canada. These businesses were more prevalent in the United States when they were first formed, and it was only a few years later that they had begun development in Canada. This indicates that there is room for growth within a relatively new market space.
All right, so although they face many challenges, there are also many opportunities that CDFIs can take advantage of in order to generate solutions to these problems. First, CDFIs can develop innovative financial products and services that meet the unique needs of underserved communities. For instance, they can offer microloans, credit building programs, and financial education programs that help individuals and businesses build their financial capabilities. Moreover, CDFIs can partner with fintech companies to leverage technology and offer digital financial services that are convenient and accessible. Collaboration is another key solution opportunity for CDFIs. They can collaborate with other CDFIs, traditional financial institutions, nonprofits, government agencies, and community organizations to pool resources, share expertise, and expand their impact. For instance, they can form loan funds, joint ventures, or strategic partnerships to leverage complementary strengths and achieve common goals. To continue, CDFIs can increase awareness of their mission, services, and impact to attract more customers, investors, and partners. They can leverage various communication channels, such as social media, newsletters, events, and public relations, to reach out to underserved communities, investors, and policymakers. Moreover, they can participate in industry conferences, workshops, and networks to share best practices and learn from peers. And finally, technology can also offer a significant opportunity for CDFIs. They can leverage technology to streamline their operations, reduce costs, and enhance customer experience. For instance, they can use digital platforms to automate loan origination, underwriting, and servicing processes. They can also leverage data analytics and artificial intelligence to improve risk management, customer segmentation, and product development. All right, so this is our presentation. Thank you very much for listening. We've incorporated a list of references here as well for all of the sites that we access for this information. We hope you enjoyed. Thank you very much.